morning and welcome everyone to the Ultimate Trading webinar for beginners. My name is Danny and I will give you the webinar today. We are happy to begin the webinar. Like I said, I am Danny. This is the Ultimate Trading webinar for beginners and we can finally hit the road. We're just going to click here on the X and bring it back to the full screen. Okay, like I said, we're going to open the webinar with the introduction to the company. So as many of you know, we are a regulated company and we are here since 2006 for nearly 2 decades. If you've got any questions or queries along your journey, you can contact our customer service very easily right here via the chat or the WhatsApp. And if you're using a different interface, you can contact us directly through cs@avatrade.com. If you got any trading queries or question, you can have a senior account manager assigned on your profile to give you full support through the process with no additional charge. Of course, if you don't have a senior account manager, you can contact our customer service to help you get someone assigned, depending on your eligibility. Besides that, we're going to carry on with, like I said, a web trader, but we're also going to write down the other platforms that we have. So as you know, we've got MetaTrader 4, MetaTrader 5, AVA Futures, which was recently added, and AVA Options, and we've got AVA Social as well, which is very, very popular these days. And the reason for that, and we're also going to write here the web trader, and in the app, it's called the AvaTrades trading app, which looks a little bit different, but the features that I'm going to show you today are useful there as well. Okay, let's understand a little bit about the concept, how AVA Social can help us. So what it does is basically it allows you to do copy trading. Copy trading means that I can link my account as if, let's suppose that we're trader A and we would like to copy trader B. What will happen in this case is our account will trade exactly as trader B is trading. The benefit of the automatically. The key ingredient in here, guys, is automatically, which could be a huge time saver. The way to use this is very simple. If trader B is successful and I'm linked to his account, I will enjoy the same success as I am copying his trading. Now, what if trader B, what if we don't have the same balance as trader B? Okay, sometimes we have, well, this is a demo account with $10,000, but what if our balance would have been maybe 1,000 or only 2,000 or something like that? Well, in this case, what we can do is in the app, so unfortunately I can't show you that, but I will just explain and I hope you will understand. What you can do in the app is you can choose another lot size. This means that you can go for the minimal lot size as an example to still contemplate and see if the strategy is good for you or not. Of course, if you go with a lower lot size and the results seem satisfactory, you can just increase it to enjoy the strategy to its full extent. Another solution for that could be if I am copying someone with 10,000 and I'm with 10,000, I should expect the same result. If I'm with 10,000 and I'm copying someone with 100,000 or with 50,000, maybe I'll want to either add the same capital to enjoy the same results, or as I've explained, I can custom the lot size. If there are any questions until this point, guys, about anything that I said so far, feel free to let me know. We're going to carry on with the menus to the left. We're going to click here to fold it down, click here on the X to close it. And at the upper left, we've got here those 3 lines which can get us to our personal area. In our personal area, we can modify any necessary details in our account, and we can also create a sub-account if we would want, and we can make a deposit or withdrawals or upload any documents right in here on those 3 lines. Underneath is trade. This is where we are. Underneath, we've got positions, which we could modify if we would have any positions. In orders, it's the same idea. just for orders. And in history, we can select what date we want to be displayed. In here, under history, we've got signals. If I'll click on the signals, I'm on the signal section now. The way that it works is we've got the date. We're going to go from right to left instead of left to right. We've got the date that the signal was produced. In here, if we click, it's going to open the specifications for the signals. We'll speak about it in a moment. There is also something called take profit, entry price, stop loss, the type, and the name of the instrument. Now, why does this make any difference if I'm trading a signal that was just analyzed or a signal from a few hours ago? By the way, a side note, this is the newest signal, and as I go down, this is getting older and older. So if I look at the FTSE at the moment, which seems like the stop loss and the take profit are not there, okay, we'll understand what it means, but first we're going to use what we've got at the top to make our process easier. We're going to click here on view signal, then we've got a bunch of information open here on the chart. We're going to click on the arrows to expand the chart, and then we're going to match the validity to get a similar picture. What we can see here, that the validity is actually daily. This means that each candle on this chart represents 1 day. In here, in this chart, if we look at the top left, we've got this 1M that's selected. We'll click on the arrow, and then we can scroll down, and we will find 1 day for 1D. We can click it, and then we can enable the crosshair. We don't have to, but I just want to show you. And if we do this, we can see that the dates are changing 1 day difference. Yeah, it's right here at the top. Okay, the reason that I wanted to do this is because when we're looking at minutes and the chart is displaying days, we might not have the same picture if we would want to do some analysis. Now, let's click here, clean the slate. If I don't want to do any analysis and I want to use the signal, plain and simple, without doing any of this, let me just show you how easy that is. We can click on view signal to open this. Okay, view signal. We don't even have to expand the chart. We can just scroll down. In here, we've got the levels of support and resistance. Shortly, support and resistance are peak points on the chart that represents points where we think that the instrument can turn around. And as an example, this could be a resistance, this could be a resistance, this could be one of my support line, another one right here. And those are basically just simple example to the reference of what is support and resistance. So this is obviously my resistance. So resistance will be at the top and support will be at the bottom. Again, we don't have to do this, but just to understand how the signal works, the take profit and the stop loss are based on those levels. Now, since we're using a signal and everything here is happening automatically, I can just maybe choose the scenario. So I'm going to go with the buy. And now I've got the take profit and the stop loss placed for me automatically. Of course, I can modify anything that I want. I can change the lot size. I can even change the take profit if I want. And then I can, open a position. But again, if I don't want to do any changes, I don't want to make any changes. So just let me show you how simple that is. Maybe we'll click on gold, and then we can choose the scenario. This time we'll go with the sell. Okay. And yeah, we are good to go. We are good to go. We've got the take profit and the stop loss marked for us. But just a second, Danny, what exactly is the take profit and the stop loss? This is something we still don't know. So we're going to explain very, very easily. First of all, I want to show you guys just the take profit and the stop loss. We're going to place them as red and green. This way I can show you visibly what will happen if it gets to the green line or the red line. So basically, as we can see, let's maybe switch to hours. This is, again, I'm doing this just to show you guys. You don't have to do it in your own by yourself. Now, if we're looking at the take profit, which is at 3,657, 3,650. 7. Oh, we are with a sell. My bad. Yeah. So the take profit is right here is the green line. Since we are with a sell, it means that our intention is that the value will decrease. When we buy something, we want the value to increase. And when we sell something, we want the value to decrease. Now, what exactly the take profit and the stop loss are? They are pending orders. There are 3 pending orders. Execute when price hits. Okay, again, you don't have to remember this because there is the explanation right here, but I'm simplifying it in my own words to make the process a little easier to comprehend. So execute when price hits, what it does is it's opening the position automatically when reaching the price. Okay, and we've got, those are all pending orders. We'll explain in a moment what it means. Take profit and stop loss. Now, execute when price hits will behave as a pending buy or sell with MT4 or MT5. But in here, we gave it a different name. It still does the same thing. It opens the position automatically if it reaches the desired price. Take profit is closing the position automatically with a profit when reaching the price, and stop loss does a similar thing, just close it with a loss. In other words, by using the signal, by using this pending orders, take profit and stop loss, we fully automate the position in terms of the closing, and we don't have to do any analysis if we don't want to, right? How long did it take us? Few seconds, right? Let's try another one just for fun. We're going to click on Ethereum. We're going to expand the chart, click here on sell, and we are good to go. I think it took less than 10 seconds, but no one is measuring. Okay, it's very, very simple. Now let's speak about what we saw with the FTSE. So sometimes we're going to have the stop loss and the take profit blank in the value. And the reason for that, if we click on view signal, is because the levels that was analyzed in here already happened. In this case, the signal turned futile and the market has already reached a key level. It's also important to, and if we'll try to use it, similarly, we will not be able to. Now, it's also important to remember that the signals are not provided by AvaTrade, they're provided by the third-party company, the Trading Central. Of course, guys, as I said, if there are any questions until this point regarding the signals, regarding AvaSocial, regarding anything else, feel free to share with me. The next thing that I'm going to show you is the news section. It's also important to know that what we are seeing here, those averages and support and resistance, this is under the umbrella of technical analysis. Now, if I'll divide those two types of analysis, we've got types of analysis, which is technical analysis and fundamental analysis. The way that it works is very, very simple. Technical analysis will be the analysis that we can withdraw out of the chart. So averages, statistic, okay, we've got also what we saw, support and resistance, which is basically the how things are moving, right? And if we look at the fundamental analysis, this will be news, governmental decisions, and all kind of drastic economical changes like the interest rate change, wars, God forbid, transportation problems. and so on, which will be the Y. Now, the reason that I'm showing you this is because we just saw with the signals technical analysis. What about the reason? What about the why things are happening the way that they are? And the solution for that is fundamental analysis. So in here, in the news section, you can find news. At the moment, we're looking at pre-European market brief. If I'll go through the article in here, we see some nice names, Tesla, Nvidia, some nice names in here. And at the bottom of this segment, right here at for related instruments, if I'll click it, it's going to show you what instruments are related to the article. As in addition to, and of course, I've got different categories in here. Underneath, we've got this Globy icon, and in this Globy icon in Discovery, we've got analysis views, analysts views, market buzz, forex features ideas, economic calendar, and the trading calculator, which can also help me doing my analysis. So I'm going to show you the market buzz. In here, we've got various categories as well. We're going to give it a moment to load the data. And now we've got this bubbly thingy. So we've got open door in the middle with the highest level of mentions. As we saw, Tesla is also in here and Nvidia. If we'll click on one of them, maybe Tesla, we've got this screen with various parameters in here. Price may rise, then we've got here various topics, increasing held ownership, lawsuit, legal investigation, and acquisition completed, and price target set. I don't have to read all of that. I can just focus on what is important for me doing my analysis. So if I'll click here on the box, it will filter only the increasing held ownership. So now we can read only this specifically, and we can even go to Google and we can, take it to the next step, but we don't have to. If we click on the arrow, then we can go back and we can select something else. We can even search if we want in the different categories in here as well. On top of this, for more official kind of announcements, we've got under Discovery again, the economy calendar. And in the economy calendar, we can find all kind of governmental decisions, economical news changes, right in here, all of the reports. If the calendar looks like this, all grayed out, and it doesn't display the appropriate what we want to see, this is because today is the last day that is selected. So to properly, if I want the calendar to display what I want, I'm just going to select today, and it also seems like something is filtered. So what I'm going to do is click on reset, and now it's fixed. We see that things are still grayed out, but if we scroll down, we see that at the bottom of this list, we've got those more lit white font that represent the upcoming event. Everything above the red line that already has the result are things that already happened. Now we've got here all kind of, New Zealand and Japan and Singapore and all of those things. I don't necessarily want to analyze all of that. What I want to do is click here on the arrow and select only the things that are relevant for me. So maybe I'm going to click on US, and maybe I'm going to click on China, and maybe we'll stay with that for the time being. And now I can also extend the selection, clicking here on the 17th, then the 24th. And then when I've got this blue trail across those dates, I know that those dates are selected. And now it displays the appropriate, the correct image. Now let's speak a little bit about how the calendar is constructed. So in here we've got those 5 tiny icons with the impact, volatility, price chart, event chart, and add to calendar. We will speak about it in a moment. And on top, we've got here the previous, for the previous result, forecast for the range of what we expect. Obviously, it's not a guaranteed number in any way. And the result. Why don't we have the result? Because those things are yet to come. We're only going to find the result for things that already happened. And now, as you can see, we have the Fed interest rate decision. We see that the forecast is that it will be lower, but again, nothing in this world is guaranteed. We also have here the impact. So the interest rate decision is among the high impact events. It's very important. What if I don't want to see all those low and medium? What if I want to see high only? So I can click here on high, and it will filter out only the high impact events. On top of this, what if I don't necessarily have the available time to remember that the interest decision time, and I want to have some kind of a reminder for when it's happening? Well, if I'll click here on add to calendar, I can literally link it into my calendar, and then I will have a reminder when it happens about the result, and I can just prepare myself comfortably by the computer, ready for the decision. I think it's amazing, since we're busy during the days and we don't always have the time to prepare properly. So this is a very efficient solution. Of course, in the Maglify, I can search for something specific, but I don't want to delay too much about the economic calendar. I want to get to the practical part. So I'm sure you guys can enjoy that in your own free time. To go back to the default screen quickly, we can click here on Ava Trade, icon at the top, and we are back. We're also going to select an instrument to begin the second segment with. We're going to click here on the notes, click here, and then get rid of everything. Maybe not. Maybe we'll get rid of what's on the top, but this bit here, I think we should keep it. All right. Now, a way for us to select the instrument that we want, one way is manually through the categories. So we've got here also this Maglify, the search symbol. We've got here the wish list, which we could add the instrument that we want. Another thing here is the categories themselves. So we've got here Forex, we can click and expand. We've got here indices, cryptocurrencies, and commodities. We can click and expand. And the stocks for US stocks. We can click here on commodities. We've got this long list here in here. We'll click on maybe metals and maybe gold. Okay, we'll click here on gold. And then we'll click here on the arrows to expand. But I want to show you how you can choose it from the inside. So we're actually going to click on silver. We're going to click here to expand. And then we're going to click buy or sell to enable the order entry. And I'm also going to show you how I can display gold from here to make it more comfortable. So as you can see, silver is actually where it says silver this is actually a search bar. So I can select it and then delete it and then type what I want and then select it from the list. But please notice what happened when I do. Silver order entry stayed in here. So in order to display the correct order entry, we can click here on buy or sell and it will change to the appropriate instrument. We can also see that gold seems bearish. It seems bearish. Okay, we are on 1 hour. Gold seems bearish. What does this mean, bearish, by the way? Since a bear slammed his opponent to the ground, we can call a negative trend a bearish trend. And a positive trend we called a bullish trend. Why? Because a bull will allegedly lift his opponent in the air. Therefore, a positive trend is a bullish trend, and a bearish trend is actually a bear slam his opponent to the ground. Now, this seems a bit bearish, but let me change it to days. So you can see it's not really bearish anymore. It's bearish on the daily, but look at the general trend in here. Okay, it seems like gold is breaking all the records, and now we're in another yesterday all-time high. If we switch to weeks, we can see that gold has never been at this high to this point. We switch to months, and that's just incredible. just incredible from all aspects. Gold just, doubled itself in the past less than a year from what we see. If we switch, let's try weeks. Okay. Just one quick look at days. Okay, we'll stay with that for the time being, just to begin with, and we'll keep going to the right. So we've got here the search bar, as we said, gold, so we can delete it, put something else, select it from the list, NASDAQ or something else that we want. Now, in here, we already saw this from the signal section, so we've got the time frames. In here, we've got the what will be displayed on the chart. So now it's candles, it could be line, it could be also the bars. Okay, and here we can enable the crosshair from no crosshair to crosshair to get the data from the candles, open, close, high and lows. In here we can change to a different layout to have multiple charts, 2 charts, 3 charts, even 4. And the last one we've got here is the indicators, which we're going to use anyway, so there's no point delay about it now. And in here we've got those nice lines which we can use to help capture a specific area and also to help display support and resistance. Just a second. Okay, so this seems to me like a good level to aim for. So this is roughly $50 from where we are. And let's also try to look at it from the weeks. So I've painted in green and red, not mandatory for you guys. As I have explained, we're having a webinar and I want you guys to see things as visibly as I can show you. So we're gonna turn this green. We're gonna also turn this red. And then we will enable all 3 orders, the execute when price hits, the take profit, and the stop loss. And we'll maybe mark an entry to be 3,670, a little higher. And our take profit can be 3,720, and our stop loss 3,620. Yeah. And maybe let's set the lot size to the minimum. The reason that I'm doing that is that I can always increase to what I want. And also, we've got the name of the instrument. We're going to write down the specs. So entry at the moment is 3,670. Take profit, we've learned that TP stands for take profit, yeah? So that's 3,720. And the stop loss, we've learned 3,620. Now this is how far away are we? We're going to check it in a moment. We are, if our entry is 3,670, right? And we have take profit is we've got 3,720. This is $50 away. And we've got 3,670 minus 3,620. This is another $50 away. And now I want to confirm that this is indeed a movement that gold can make. Okay, because the last time that it's been on those levels was, let's see how far away, less than a week. Okay, not that bad. Now, if we carry on with this and we would like to validate that those 50 are truly achievable and it's not going to take it too long or it's going to happen too fast, how we can validate this? One very primitive way, which we're not going to use, but it's maybe good to know, is to just make a comparison with the previous candles. But before we do that, we would like to first decide what time frame are we going to work with. Do I think that this level is something that can happen today? Maybe it can take 2 days, 3 days, maybe up to a week. So let's change to a week. Okay. Okay. I don't think that it can take it too long, because if I look at the statistics, it seems like it can even get there by tomorrow or in 2 days. But what I can do to be more precise is I can look at what happened yesterday, which was the 16th, and I can compare the levels of the open, close, high, and lows by themselves. This way, if I subtract the open from the close and the high from the lows, I've got those two edges, which I can then sum up together to see what was the total movement of yesterday. Now again, this is a very, very primitive way. I'm going to show you how to do this automatically with an indicator, but I want you to know what the indicator does, not just to do what I'm showing you blindly. So the logic behind this is to measure how much it moved yesterday, which apparently was $18. Let me remind you that we're aiming for $50 away. So now we've got those two edges. So between the open and the close, it moved 18, and between the high and the low, it moved 28. Now, if we look at the size of this candle of yesterday, we see that it's relatively smaller than other candles. So how can I even use this as reference? This is not an average movement, right? What I would need to do is I need to accumulate all those candles and basically cut an average from that, which is a bit complex, time-consuming, and very primitive. What I can do instead is I can go to the indicators, click in here and type the filter AVE for average true range, click and drag it to the right. In the length, I can just select how many candles I want. Let's say a week, or maybe let's say, you know what, let's say 10 days. And I can change the color, not to be confused. And here we are. The movement for gold is actually 31.756 and not 28 and not 18 that we saw. So we're going to delete that. And we're also going to set a certain target, time, movements, and units. And in the time, we're going to set our, in our movements, we're going to set our average movement, ATR 31.756 based on 10 per day. Great, great. So this 50, I'm going to ask a question in a minute, okay? But first, I want to set myself a target. Since from what I see, even if it gets to that level, I'm only going to make $50. I'm not really happy to make I'm not really happy to make $50. I want to make a little more than that. So maybe I'll want 250. Let's say $250 sounds amazing. And one day, now my next question, guys, if I set it to this level and I expect this to happen in a day, let me remind you, the average movement per day, the average movement per day for gold based on the current ATR is 31,756. How many days statistically will gold take to move $50? This is not a very difficult mathematical question, but just to understand that you guys understand what I'm explaining, I want to ensure. If the average typical movement for gold is 31 and what we're aiming for is $50 away, how many days should it take it to move across 50? Will it happen typically in a day, or we need more than that? Anyone has an answer? Thank you, Arif. 2 to 3 days. Amazing. Why, Arif? If you can explain to us why 2 to 3 days, why not just one day? Because on daily basis, it only moves 31. So thank you also, Mr. Shikashiti. So this is also something we can look at as a reference, and we can say 2 to 3 days is if nothing fundamental nothing fundamental will happen to change that. Of course, the interest rate decision might make gold to move even much more than that. Okay, so 2 to 3 days seems reasonable. So the time I'll change to 2 to 3 days. Again, we all agree it seems reasonable. Might be more, might be less. Okay, but definitely is in our range. Okay, definitely in our range. Now, I want to know how many units we need to acquire to get 250 instead of 50. So I'm going to ask another question. How many units of gold we must buy to make 250 with $50 difference per unit? And I'm also going to teach you a very important rule. When we buy or sell 1 unit and it moves $1, we will gain or lose $1. Therefore, when we buy or sell 10 units and it moves $1, we will gain $10. Correct. Again, thank you, Shikashiti. Very good. Excellent. And the way that this was done, is we can go and do it the other way around, right? We can split our target by our movement, then we get the units. So if we'll try to do this, we're gonna go and divide 250 by 50. The answer is correct. The answer is 5. Okay, we'll try and test it out. We'll place here, not in the lot. This will give us 500 units. Let me just show you. If we do this in here, we've got 500 units. We want to place in here 5. Then we got 5 units. And then we obviously see that the numbers match and we got exactly what we wanted. So possible profit is 250 and possible loss is 250, and it's great. Now, by the way, I would like to stop for 2 minutes and ask if anyone has anything to add or to ask regarding the process or anything that we've done until this point. If something doesn't make sense, guys, feel free to let me know. In the meantime, I will explain what was done in the next 30 seconds so we can quickly recap, and then I will teach you about the leverage here and the this bit in here. Okay, so initially the way that we started is we saw gold was actually going down. We were looking at what 1 hour, we saw that gold was typically going down. We changed to the weekly. We changed to daily, and when we saw the daily chart, it wasn't enough to analyze, so we changed to weekly to have a better perception, and then better perspective, and in here we can see a bit more clearly what's going on, and we can clearly see that the general trend is absolutely bullish. Gold is breaking another record one by one, and we can safely say that gold still has possibility to go higher. Now, with this in mind, we located 3,720 as our target, and our stop loss 3,620. But we wanted to validate. We wanted to validate that those levels are achievable. Maybe those levels would take a month. I don't want to hold a position for a month. So how did we do it? Primitively, we analyzed the previous candles, but when we applied the indicator, we saw that with the indicator, oh, I think I actually dragged it down a bit too much. Just a second. Okay, there we go. When we When we applied the indicator, we saw that 31 was the average movement when we're aiming for 50. And then we decided to settle about holding the position for up to 2 days, 2 to 3 days, instead of just a single day, because the range for a single day is not 50, is only 31. As a result, we understood if we want a goal to move 50, we need 5 units, which we placed on the platform and make pure sense. So everything now seems great. Let's look at the question. Why don't you think about price may go down? Because after reaching all-time high, it's always gave red candle. How can we expect it to go up or bullish? Well, this is an excellent question. Thank you. In this case, what I would want to do is, there is another question in here from Pormui, sorry. Unfortunately, I don't have time to explain about Everprotect now, but you are welcome to join us with tomorrow's live Q&A and ask this question there, and I assure you, you will get a very good answer. Okay, but now I want to focus on what Chikashidi asked. Okay, so at the moment, if we're looking at the ratio, we're looking at the ratio of 1 to 1. So we can gain or lose the same amount, 250. What if, like Chikashidi is asking, if it will go down? So we probably don't want to have this ratio of 1 to 1, as we want the exposure in some cases to be lower than the profit ratio. How can we do this? If we're looking at percentages, 250 will represent 2.5% out of my balance. How do I know that? I can go possible profit or loss divided by balance, which will equal factor, times 100 equals percentage out of balance. So if I'll take the possible profit or loss and I'll divide it by the balance, and then it will equal to 0.025, sorry, another dot after the decimal, 0.025, and then I'll multiply this by 100, and then we see 2.5%. Now, what if I want my exposure? Let's do it together, okay, like we wrote here, and then times 100, okay. Now, what if I want this 250 to stay? No problem, making 2.5% per day or per few days. It seems reasonable, but I want the loss to be just 1%. Okay, I want it to be 100. I want it to be 100. Okay, so how do I make it 100? Who knows? But I want to maintain, by the way, my profit. I don't want to I don't want to reduce. So one solution is to reduce the lot size. If I take a smaller position, I can lose less. But the problem with that is I can also gain less. So what I can do is I can get the stop loss a little closer to the entry. Now this is something that I need to find the sweet spot. I can't have the stop loss on my entry because it might trigger too fast. I can't have it too far away because then I'm too exposed. If we will try to cut the difference by half, let's say take this 50, cut it by half, let's say 25. And we've learned that the accumulation between the price difference to the number of units is what's giving us the possible profit or loss. So if I'll divide this 50 by 2, it's 25. And then I can measure from my entry, which is 3,670, 25 instead of 50. And instead of 3,620, I needed to be 3,645. 3,645. And now if we test the numbers, it makes pure sense. Okay, as we can see now. Oh, sorry, this is what we subtract 25. Yeah, so this is, you can see, 125. 125 is not a flat 1%, is 1.25%, 1.25% exposure. And if the market goes against me, I know that I can lose 125 and not 2.5%. Why am I showing you this? Because if I trade something else, I'm not always going to trade only gold and only a single position. I trade different things as well. With this ratio, what this gives me, the biggest benefit is, even if this position loses and I have another position with the same ratio, what will happen is I will lose 125, but I can maybe balance myself with a profit of 250. The ratio is something that takes a long time to balance, from my experience, because it's about experimenting, and you know, it's not always we get the bullseye. Everyone has a different ratio he likes to work with, but I'm showing you here this as a tool for you to use. As I said previously, if there are any questions, I'm happy to answer. I hope that Shikashiti, this makes sense to you. If the instrument go against me, I don't want to lose as much as I gain. This way I can have harmony and diversify more comfortably. Now, let's speak about that bit here. As we can see, the price for gold is 3,663. The number of units we take is 5, okay? And if we multiply 3,663 by 5, what we get is 8,315, which is our value. In other words, the way that this works is the price per units times number of units equals value. Okay, and now underneath we've got leverage. Leverage is 1 to 20, and leverage multiplies buying and selling. So instead of being able to buy or sell depending on my balance, I have a multiplier that allows me to buy or sell more. It does not mean that I can gain or lose more. It means that I have the ability to acquire more units, and as a result I can make or lose more. But leverage by itself is only a multiplier. If I take the exact same position with or without leverage, so let's suppose that this position is an example, doesn't even require me to use the leverage. Why? Oh, sorry, it does. It does. Of course it does. Of course it does. But if let me just show you an example here, okay? You see, this position is an example, is something that I can take without the leverage. So the leverage doesn't have any effect only in terms of the margin. It's giving me the ability to acquire more units. Okay, and as a result, as I said, I can make more. Think about it this way. Without the leverage, I would need 18,000. With the leverage, I need 20 times less. 20 times less, which brings us to this number. So what we can do is we can go value divided by leverage equals margin impact. And margin impact is the necessary amount to open the position, and not the value. Not the value, which again, if we do this together, guys, just to show you, if we do value divided by leverage, this is what we get. You absolutely don't need to know that if you're using the the web trader. But if you're using MT4 or MT5, this is super efficient, and I would highly recommend you to know that, what I'm explaining here. There is a question, another here. Looking for, I guess, Shikashiri. What I would explain to you. Oh, sorry, I pronounced your name correctly. Oh, sorry, it's Shirishiti. Sorry. So Shirishiti, to answer your question, I think the easiest solution is just to contact your senior account manager, and he should assist you with that. That's what I think. Like I said, guys, if there are any questions until this point, please let me know. So in the meantime, what we're going to do is we're just going to look back to what was done in terms of the analysis, and we'll also speak about the possibilities for gold to go a little higher or lower. What we saw in the beginning in the economic calendar regarding the interest rate. Gold is a lot of people, a lot of instruments in the market are based on supply and demand. Gold is not based on supply and demand. Gold fluctuations in the recent few decades, maybe before few centuries, it was based on supply and demand, maybe a little bit. But what we're more familiar with is that gold represents one of the biggest safe havens, and this is how it got to the point that it's at right now. It's not because they are because there is less gold in the world. Okay, let's put it this way, because there are less mines or something like that. What we can do is we can analyze what's happening in the economy. As an example, CPI, PMI, and the interest rate decision itself are things that can help us achieve a more precise level of analysis. So what we did here is nice and all, and we've placed those lines and we've matched it with an indicator, and we've learned how to compose a position with a certain logic. We even got the position, we even got the numbers that we wanted, the exposure that we wanted, but it's imperative and it's very, very, we always want to mix both analysis, fundamental and technical analysis. We don't just want to rely on what's on the chart. We can, but I highly recommend you guys to also, I encourage you guys to follow the news, to follow the reports, and to enhance your analysis with the reason of why things are moving. Unfortunately, guys, our time is up for today. I'm happy that I could help. Of course, Samantha. Anytime we're doing those webinars to help clients, no other reason. I'm happy with all the questions and everything that that can help. So unfortunately, the time is up. So I appreciate everyone who joined us today. Like I said, I'm happy that it helped. You're all welcome to join us with tomorrow's live Q&A. Unfortunately, next week we're not going to have a webinar, but the following week instead. Until then, I wish you all best of luck with trading. Have a fruitful week and have a good day.